What up, guys? I'm Opoku Freeman, the founder of Free Pips FX. In today's video, I want to share with you market structure. So, few days ago, I uploaded a session where I was teaching one of my students, and at the comment section, someone said I should upload a course so that they can actually understand what I'm teaching. So because I listen to you guys, I'm taking my time to get you through everything that I was teaching in that particular class and also add some more. So this is going to be a 1 week, or it's going to be a course where you will have series of topics that I'm going to be discussing with you. So all you have to do is grab your pen and paper and take notes. I'm going to teach you, take my time, and it will be like I'm teaching a class 1 student so that you can actually understand everything that I'm going to share over here. So without wasting much time, let's get into it. But before then, let me quickly introduce you to my platform where I provide signals over there. So this is Free Pips website. If you are new to this page, all that you have to do is you sign up, you fill in your details in here, and then you create an account. So because I already have an account, what I'll do is I'll sign in. After signing in, this is where you come to. You have your user dashboard, user dashboard, active signals, saved signal history, and your profile. So this is where you are going to see everything that goes on there. This is particularly for signals provisions. And then if you come to active signal, currently this is the active signal. Right now we are running in profit on Euro USD. This is what we are actively trading. Euro USD and XA USD all are running in good profit. So on this page you have your user dashboard where you see everything that goes on in here. So the moment you sign up, you already automatically have a free trial subscription where you have a limit to 5 signals for 3 days. So then if you want to upgrade, you come to choose your plan. Monthly subscription for $50. The duration is 30 days. Premium signal with setups, sniper entries, 40 pips maximum stop loss except BTC USD and XA USD. 0 to 5 trades per week. Risk management 5% on personal account, 1% on Profirm account, 80% to 90% accurate signals. Minimum risk to reward is 1:3. So these are the services on the platform. You can decide to choose monthly, 3-month subscription, 5-month subscription, and 12-month subscription. Any one that you feel like it's cool for you, you can select any one of them. So that this is the platform. You have accurate results. The best thing is you receive email to prompt you that there is a signal that is currently active. There is active signal running. So all you have to do is come to the site, check. We have your take profit 1, take profit 2, your stop loss limit, your price entry limit. So and then the trend bearish, the strategy I'm using SMC, the trade outcome pending, because this one is currently running. This is Free Pips page. Sign up today and skyrocket your trading journey with me, and you're going to love it. Sign up and make some money for yourself. Alright, that is it. So let's proceed with what I have for you today. Market structure. If we say market structure, what comes into mind? So market structure simply means, the simplest definition I can give you is the behavior, condition, and current flow of the market in a given time frame. That is market structure. The behavior, condition, and current flow of the market in a given time frame. We have 2 forms of market structure. We have trending market structure and ranging market structure. Under the trending market structure, we have uptrend and we have downtrend. And also at the ranging market, we only have range. We don't have types. It's only range. So how can you define a trending market? A trending market is when the market is either creating series of higher highs and higher lows, or creating series of lower highs and lower lows. That is a trending market. And on this financial market, the market does two things. It either trends or ranges. So we have what we call bullish market structure, range market structure, and bearish market structure. What is bullish market structure? Is when the market is creating series of higher highs and higher lows, or when the swing of a trend breaks previous high. That is when we have bullish market. With this structure over here, the skeletal style of this structure, we have an uptrend, price creating higher high, higher low, higher high, higher low, higher high, higher low, because we are breaking the swing side of the market, the edges, the tops of the market, breaking the structures of the market. So that is what we term as bullish market. We create, here is a low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. So the first move is called impulse move, and the down move is called correction. So it creates series of impulse, corrections, impulse, corrections, impulse. This is an uptrend. Now let's move to a downtrend. Downtrend is when the market is creating series of lower highs and lower lows, whereby it breaks previous lows. So we have a lower high here, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Mind you guys, if you don't know how to read this, then you shouldn't start to trade, else you would set yourself on fire. You would lose every money that you deposit on the financial market, because this is the foundation of technical analysis. If you don't understand market structure, then there is no point in trading, because you will lose every money that you put on the financial market. The foundation of it is knowing market structure. So your ability to identify a high and a low is what will define your profitability in the financial market before other factors comes in. So now we are done with the trending market. We said we have uptrend and the downtrend. An uptrend is when price is creating series of higher highs and higher lows, higher highs and higher lows. A downtrend is when price is creating series of lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. Now, a ranging market. A ranging or a range market structure is when the market is creating equal highs and equal lows. Equal highs and equal lows. It's majority of the time is what creates liquidity, but we will get to that part and you actually understand it. But for now, what I want you to understand is market structure. Market structure. So let's move to real-time chart so that you can actually understand what I am trying to mean by saying bullish market. So first of all, let's identify a bullish market on the real chart. Currently, this is gold. I've actually given this signal for a buy and we are running in good profit. I know majority of you guys have secured your profit already and some are leaving some profits running. Okay, so from this side, from this range to this range, currently price is in what? An uptrend. And if we are in an uptrend, all that you'll be looking for is to long the market, to buy the market, opportunities to buy the market. So we have a low, a higher high, a higher low here, and we have a higher high, a higher low, a higher high, a higher low. What should we expect next? We should expect a higher high. This will be what we want to look for. So here is a high, a higher high. HH means higher high. No, I think I have to do it this way. We have a low here and a high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low. The next thing that we want to expect is another higher high here. Okay, so this is the basis of understanding technical analysis. If you don't know your technical analysis by having in mind market structure, then you shouldn't start trading, because it's the fundamental of all technical analysis. All right, so that is an uptrend. Now a downtrend. Let's now look for a downtrend. You know why I said market structure is a behavior or condition and current flow of the market in a given time frame. In a given time frame means in the 1 minute, if you go there, you will see a trend. But if you come to 1 hour or 4 hours, you will see one candlestick, where even a correctional move can be a whole trend in 1 minute. So that is why I said in a given time frame. One can be a scalper and be trading in the 1 minute time frame and still be using the trend. But then 1 minute time frame trend can be different from 1 hour time frame trend. Okay, so that is why I said in a given time frame, the market structure definition. A downtrend. Let's move on to a downtrend using this side of the chart. Here is a low, a lower high, a lower 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 low. So what will you be doing in this trend? You will always look for selling opportunities. Okay, so this is a downtrend. And a range. Let's look for a range. We said market basically does two things: it trends and it ranges. So, and the trend, we have uptrend and a downtrend. So here is a whole range, price creating equal highs and equal lows. Here is a low, a high, a low, a high, a low, until it finally broke it. So here is a range. Okay, so this is basically what market structure is. Understanding this will skyrocket your trading profitability, and you would always make informed or correct decision in the financial market. So guys, this is market structure, and I hope you've actually enjoyed it. So guys, I hope you've learned something new, and even if it's not new to you, it should serve you as a revision, so that whenever you come to the market, you will not forget this, and you always follow this and make informed decision on the financial market to increase your profitability. But if you are not understanding it yet, then all that you have to do is go to Free Pips, sign up, and then make use of my signals. All the signals I'll be providing here, you'll get to know the explanations to every signals. You get to know the confluences, your stop loss limit, the amount of pips you risk, and the money or the percentage you have to risk. So guys, thank you for sticking with me up to this point. Make sure to like this video and subscribe to this channel, and see you in another episode of this course. And this course is going to be basically about SMC strategy. So we are done with market structure. The next episode will be liquidity. So thank you. This is Freeman, founder of Free Pips FX Academy. See you in another one. Peace out.